Hi there, and welcome to this tutorial video on how to create a trading strategy that takes reversal patterns or reversal bars with the trend. We got a question about this earlier this week, and in this video we'll show how to do that with the regression channel. That's what the person who asked this question asked about, how to take reversal patterns with the direction of the regression channel. So I thought I'd just put up this little tutorial video on that, show how to create a strategy template using Bloodhound. So the presentation will be about 60 minutes. So if you have questions that come up along the way, just go ahead and make a note of it, and I will let you know towards the end of the video how to get in touch with us. All right, so reversal patterns with the trend. As I said, we're going to use the regression channel with this, and we're going to create a Bloodhound strategy template. For this, if you're not familiar with Bloodhound, it is a NinjaTrader add-on that allows you to create trading systems. So it's a really easy tool to use. If you're not a programmer, then you can use this to create a systematic trading environment. So very helpful tool to enforce more discipline on your trading setups, and also to be able to backtest the strategies and the concepts that you're working with. And finally, also to do automated trading if you wish to get involved with that. So a little bit about the LizardTrader team before we get off to the Bloodhound strategy here. So my name is Chris Lassen. I'm the co-founder and CEO of LizardTrader. To the right here, we have Harry, also known as Fat Tails, as our market lizard. And yeah, he has programmed a lot of indicators for the NinjaTrader platforms, for some of the most downloaded ones, and the tools that we'll present here today as well. So just before we get off to the Bloodhound strategy here, we're going to just quickly summarize our disclaimer here. Trading is associated with considerable risk, so make sure they understand that, and keep in mind that the results from the examples that we're going over here today are hypothetical and not based on actual performance. All right, so the regression channel consists of three main parts. The linear regression line, that is a line that fits, or best fits, all the data points of a particular look-back period. So that is considered the fair value price for the instrument that you're trading. So you can also use this to define the trend direction, and we'll show how to do that shortly. And then you also have upper and lower regression lines that run parallel to the midline, and those are defined by a standard deviation calculation. So when prices deviate above or below the linear regression line, traders will expect the prices to go back towards the regression line at some point. So therefore, when we're in a uptrend like we see here, then we can use this. I'm going to use the laser pointer. It's a little bit bigger. Here we go. This is the linear regression line here in the middle, and then the upper and the lower. And so if we're in a uptrend, we're looking to buy when we're in this lower area of the regression line, and we might want to exit our long positions when we're moving above the linear regression line here. And Bloodhound allows us to identify these areas really easily. So we'll show how to do that in just a second. So we might want to be looking at zone E and F for entering the market. And we're looking for the same zones in a short output. We're in a downtrend, and we want to enter the market towards the upper area of the channel and buy to cover at the linear regression line or at the lower end of the channel. Of course, we will need to use additional technical tools to confirm these buy and sell signals. And as I mentioned, we'll look at reversal patterns, and we'll also have a look at volume analysis. But for now, let's just start with the easiest stuff here, how to find the overall trend and where to look for potential entries and exits in the regression channel. So here we have a 5-minute chart of the S&P 500 E-mini contract. And I think we'll just go ahead here and add the regression channel to start off. You do, of course, have the regression channel that comes with NinjaTrader, but that is not very practical when you're making observations on your chart. I'll make this a little bit more visible because it's kind of sticks here at the end of the chart. So if you want to move backwards and see what happened in previous market environments, that will not be possible. So if we're scrolling backwards here, the regression channel just disappears on us. So what we'll use instead here is the AntiRegression Channel, and we have a AntiRegression Channel version S for strategy use here. So we'll add that, and then you will see we need to queue this up to the same properties. So we have a width of 3 standard deviations for use with this channel here. And you see here at the outset, they're exactly the same. So it's the same calculation. But when we go backwards, you see this regression channel is moving with us. So when making the observations around the trading strategy that we're going to create, this is of course very, very practical and in fact necessary in order to create a trading system. So this is a really, really neat tool for that. All right, so let's just go right ahead here and exemplify what we're looking to do. So let's say we're in a uptrend like we see here, and we see the prices are moving into these lower areas of the channel. That's where we want to look for reversal up patterns. So we'll want to identify these areas as potential setup areas. So we can do that by opening up Bloodhound, and we're going to add a solver here that is called the regression channel position. We add that to our list of conditions or rules that we have here. That's how Bloodhound works. We need to align this with what we see on the chart, obviously. So we have a look back period of 50 and a width of 3. And then, as I mentioned, we're interested in zone E and F. So we'll just eliminate the other plots here, take these off, and only identify zone E and F as points of interest for us to enter trades. And as you see here, we're in this up-sloping regression channel, and when the price comes into this area, the E and F area of the channel, then we get these green racing stripes, and those are long opportunities pointed out to us from Bloodhound. Now here we start seeing short setups over here, and we see that we're sloping upwards. So we want to eliminate these. We want to eliminate short signals that come in an uptrend. We only want to take short signals in a downtrend, and likewise we want to eliminate these long signals in a downtrend. So we want to find out if this regression channel is pointing upwards or downwards. And in order to do that, we will make use of this AntiRegression Channel S indicator, and we'll do that by adding a indicator comparison. and we'll see regression slope data series that is found in that indicator. So we choose the indicator from our indicator list here. And we add it, and there is a data series here. For this, the regular regression channel does not have this, this output, so we have created a separate one for strategy use. Okay, so we've added this, we've selected the data series, the regression slope, and we add that, and then we're going to compare this to a fixed value. So when this is positive, we have a upsloping regression channel, and we have a downsloping regression channel if it's negative. So we're comparing here output A to output B. Output A, as I said, is the regression channel slope data series, and input B is a fixed value, so above or below 0. All right, so now we're going to go into the logic board here, and we're going to create a new logic. We'll call this regression channel entry. And we have the regression channel position. We can add and specify what the position is. So it's E and F. It's good housekeeping rules to describe exactly what the solvers are doing. When you have a number of solvers in this strategy, you might lose track of it. So you definitely want to name these appropriately. So this one is regression slope comparison, and we'll now connect these with a AND node. So we want to have both of these conditions, and then we'll see what type of output we get from this. All right, so scrolling back here, we see we're in a uptrend. This is a downtrend, but it's barely a downtrend, so it's basically flat. That's another thing we can do here. We can get rid of these flat periods by saying that it needs to be at least a minimum amount of upsloping and downsloping, and this way we should get rid of these flat areas here. Here it's sloping downwards, so it's okay to be looking for short signals. And yeah, again, here it's sloping downwards. So we do get output now. If we're in zone E and F in a uptrend, upsloping regression channel, we get long signals. And if we're in the, well, let's get rid of this. The Ninja Trader regression channel is not going to be part of our setup here. So let's get rid of that. Yeah, as I said, if we're in a lower area of the regression channel in an uptrend, we have long output. And if we're in a upper area of a downsloping regression channel, E and F, then we have a short output. Okay, so that's the first step in this strategy that we're going to work on here. Next, we'll have a look at price action setups. So these reversal patterns that I mentioned at the outset, we're looking for reversal up if we're at the lower end of the regression channel in a uptrend, and we're looking for reversal down patterns if we're at a channel high or the upper part of the channel in a downtrend. So we're going to use one of our flagship indicators for that, the auction bars. They are based on extensive testing of candlestick patterns. If you worked with candlestick patterns, you know that there are quite a number of them, and it's kind of hard to learn them and to keep track of them. So what we've done here in the auction bars indicator is to simplify a few of them that work really well, and we've boiled them down to two price action patterns, namely reversal bars and spike bars. So as for spike bars, there is a old Japanese saying that says that a spike that sticks out is really likely to get hit by a hammer. And yeah, in terms of chart patterns, that speaks to the fact that they're really easy to identify on the charts, and therefore a lot of traders will act on them. So basically what a spike bar tells us is that prices were rejected at a certain level, and then the market pushed back to where the candle opened. So we're looking for this geometric makeup of the bar where the upper or the lower shadow is a lot bigger than the body or the upper shadow or the lower shadow of the bar. So for a bearish spike, we're looking for a upper shadow which is a lot bigger than the body and the lower shadow. And for a bullish spike, we're looking for a lower shadow which is a lot bigger than the body and the upper shadow. But apart from that, there's a couple of other things going on in the background here of the auction bar indicator. This is just a little snapshot here of the indicator dialog box. I just wanted to show a couple of other things that's going on in the background. A reversal up spike is marked as blue here. You see this really long shadow, lower shadow here. But in order to be a spike bar, you need to meet some other criteria as well than just having this long spike. So we also look at significant range and volume. This needs to have significant range and volume when compared to the reference period. So we're comparing with the last couple of bars in order to avoid noise signals. We want to avoid spike bars that are really insignificant when compared to the rest of the reference period. So here we have a reference period of 10 bars here. As I said, we're also looking at the shadow size, and you can define this shadow size on your own in the dialog box. So here I have a pretty restrictive definition. So it needs to be 70% the size of the shadow when compared to the reference period. And finally, we also have a swing strength definition here. You see we have a zigzag filter running in the background here. And what this does for us is to mark new highs and new lows. In order to have a spike pattern, you need to set a new low. And the swing strength here is set to 5. So we need to have a new low of the last 5 bars, and then this rejection of this price level here of the shadow shooting up in the opposite direction, and then we have a setup bar. All right, so these settings they do allow you to customize your signals according to your own risk tolerance level, and we'll see also that that is indeed the case also for reversal bars. Reversal bars it's basically they're telling us the same thing as the spike bars. It's all about a price rejection here at a certain level. Spikes, as I just explained, are comprised of one bar, the geometric makeup of one bar, whereas these reversal bars, they look at the current close and comparing that to the previous bar high, low, and close value. So obviously you'll need 2 bars to find this pattern, and it's not as visually obvious as the spike bars. So here we have our 3 definitions of reversal bars. Reversal bar A is the most liberal and will produce the most signals for you, and reversal C, that definition, is the most restrictive and conservative in terms of the amount of setups that it will produce. And we'll explain now exactly why that is. Here for reversal A, we simply require that a new high is created when compared to the previous bar, i.e. swing strength, and then we have a lower close. So this close is lower than this close, obviously, and then we have a reversal down pattern. It's the inverse for reversal up patterns. You need a lower low and a higher close in that case. And for reversal pattern B, we want to have a outside bar. An outside bar has a lower low and a higher high. Again, we have a lower close here, and so it's an outside bar with a lower close. Again, it's the inverse for a up reversal. And then finally, reversal C, the most restrictive definition. Again, we have a outside bar, a lower low, a higher high, and then we have a close that is below the low of the previous bar. So we'll have a look at how this shows up in the chart. Again, the reversal up patterns are marked with blue. The reversal down patterns are marked with yellow. And here, these are two examples of reversal A patterns. We have a lower low and a higher close. And here we have a higher high and a lower close. Next, we have reversal B patterns. This is a outside bar, a lower low, a higher high, and a down close. Again, a lower low, a higher high, and a up close. So reversal B patterns. And finally, over here, we see a reversal C pattern. We have a lower low, a higher high. In fact, we have a close at the high of the bar, and we see that this is above the high of the previous bar. So that meets the requirement for being a reversal C pattern. So before we go ahead and look at how we can add these price action patterns, these reversal patterns to the Bloodhound strategy and to the regression channel that we're working with here, I'll just quickly explain how the entry signals are generated or triggered. So basically, we'll have a setup bar like this. We have something that looks very much like a bearish spike here. So in order to have this pattern confirmed, you need to take out the low of the setup bar. So we have to see a lower low take out the low of the setup bar in order to open a position. So this confirmation does not necessarily have to occur directly on the next bar. As we see here, you can set the trigger to occur within a specific time window. For example, that the low has to be taken out within the next 3 bars from when the reversal bar plotted. So this area here will a lot of times be intermediate support. So it might not break this on the first bar directly after this is plotted. Might take a little reversal up here and then take out the low 2 or 3 or 5 bars later. And so you can set the trigger period in the indicator dialog box to specify that. And finally, once you have a signal that is triggered, you set the stop loss above the high of the setup bar or near a key resistance level for short entries. All right, so for long entries, it's the opposite. We need to see the price move above the high of the setup bar in order to confirm the signal. And the stop is then set below the low of the setup bar or around a key support level. All right, so let's pull up the chart here again and add these to our strategy template. Reversals with the trend here. Again, we're going to work with the indicator comparison because the auction bar indicator does have data series. So we're going to call this auction bar signal 1. And we're going to find the auction bar under our indicators. And here we're going to choose the data series confirmed reversal 1, reversal up, and reversal down for short. So you just add those, and then for this particular template, I will not use the volume filter, and I will also not use the auction range filter since we're working here with the regression channel, so I'll turn that off. I will work with spike or reversal A patterns, and I will set the trigger period here to 3. And I hit OK. And then we can have a look at this. I'll turn on the color plots here for the auction bars. So I'll show the reversal bars here. And then you see here, we have a up reversal, we have a lower low, and a close above the high. So this would be a reversal C. A reversal A pattern can obviously also be a reversal B and C pattern, but not the other way around. So let's just have a look at how this is defined in Bloodhound to make sure that we have everything set up correctly. So let's go and grab the signal and just hook that up to the results. Well, that is not what I wanted to see, so I've actually not defined what it's going to be compared to. We're going to work with a fixed value again here, and the output is going to be the same for long and short, because as I said, it's a data series, so either there is a signal or there's not a signal for both long and short. And so if there's a signal, it will be larger than this fixed value 0. All right, so what we see here are long signals at just following the up reversals, and we have short signals following the down reversals. So everything looks to work correctly. Very well. Now I'll also show another thing which is quite cool with the auction bar indicator. We also have the possibility of showing composite reversal bars. What are composite reversals? Composite reversal bars are bars that are created when you put 2 bars together in one. So I'll just add a little drawing here. I can make this one a little bit bigger, so see exactly what we're doing here. All right, so if we're going to create a composite bar out of this, we see that this candle is opening over here, closed over here, opened here, and then we closed on the second bar up here. So if we put these 2 bars together, this would be the body of the bar. So in effect here, we create a 10-minute chart of 2 5-minute bars. So this will produce additional signals for us. Reversal patterns that show up in a 10-minute chart will also show up in a 5-minute chart. So we're just adding these 2 bars together in order to look for price rejections in a 10-minute chart. So pretty cool to be aware of additional signals that show up here around the regression channel. All right, so now we're going to add those bars to the strategy template as well. So what we'll do is just simply to copy this solver here, rename it to auction bar signal 2, go into the indicator dialog box and select the composite signal. Those are called confirmed reversal up 2 and down 2. So it's looking at these 2 bars, and the one data series is just on 1 bar. So we hit OK, and then we can go back into the logic board here, and we're going to add a OR node now, because we're looking for either a reversal bar or a spike bar created on a 5-minute bar, or these composite ones that are created by adding 2 5-minute bars together. So we'll put these together here and just check that everything works correctly in our output here. So I'm going to turn on the single reversal bars again here so that we see everything that we tell Bloodhound to look for, also in the chart. We can make this a little bit, and this. So here we have a composite bar showing up, and the high is taken out here, so we get a long signal up here. Again, a composite signal down here. So it looks to work correctly. So what we can do now is to hook all of these conditions up to the AND node, and then look at how they all work together. So we're in a downtrend. We're looking for reversal up. Yeah, we're in a downtrend. Obviously, we're looking for reversal down. And so we get those, a couple of those here. And then if we're in a uptrending, upsloping regression channel, we're looking for reversal up patterns. And we get one of those here, second one. So it looks like this. Let's say we're doing this with the 2 contracts. So first exit might be up here towards the midline, and then we can do a trailing stop on the second contract. That would look to be one way of managing these trades. All right, so I have added now the reversal patterns. We've added the regression channel zones, and the trend is the regression line sloping upwards or downwards. And as I said, I've turned off the volume analysis that comes with the auction bars, and the reason for that is that I wanted to discuss volume analysis briefly. This is one of the most complicated areas of technical analysis. So yeah, it can be a little bit complicated. Basically, what we'll do here is to use it to help confirm what the price action is telling us. Obviously, there are many different ways of reading volume, but here we'll just talk about transactions that have actually occurred. So we're not looking at order book levels 2, 3, or 4, or whatever. We're simply looking for situations when volume has notably decreased. So the reason for that is that yeah, normally in a trend, you're looking to confirm the trend when you see a increase in volume. So put together this little illustration here. So if we're moving in the direction of the trend, we're looking for increasing volume. And if we're going against the trend, then we're looking for decreasing volume. And the reason is that traders are more willing to buy, obviously, when they believe that the trend is going to continue. And what these low volume scenarios are telling us during corrective phases or retracements is that traders are not willing to close their positions because they think the momentum of the uptrend will continue. So for the setup that we've discussed so far, we're looking to detect a decrease in volume as we approach these lower areas of the channel. And conversely, for the downtrend, we're looking for a decrease in volume when we're coming up on the upper part of the downward sloping regression channel. The challenge with this is large differences in volume between the regular and the full session. So it's really hard to make sense of volume unless you compare it to the same time of day yesterday or the previous days. So one indicator that allows you to do that is the relative volume indicator. So it does allow you to compare, for example, average volume at 10:30 a.m. Eastern Standard Time for the last 10 days, for example. And why you want to do that, just quickly want to explain this. We see here really flat. That's the overnight session here. And then these little bumps here, that's the European session. And then these huge spikes, that's the open of the US regular session. This is a crude oil chart, but it's the same for index futures, obviously. And yeah, what we're seeing here is that these spikes are not really spikes. They are typical volume for the open of the regular session. And it's the same thing happening every day. Problem is, if you use volume weighted averages or standard deviations, Bollinger or whatever, then you have a reference period. You have a look back period with these indicators. So if you're trading in the U.S. regular session, your look back period is referencing these low volume bars, and the volume then is of course vastly different than what you have during the regular session, and therefore you will have a lot of erroneous signals, and it will not really help to confirm the price action at all, because it's vastly different than the reference period that you're working with. So what we'll do instead is looking at this relative volume indicator. So this is the same time period. And you see here, we're comparing volume with a specific time of day instead of comparing with the previous X bar. So you compare the overnight session with the overnight session, the European volume with the European volume, and you compare the regular trading hours with the regular trading hours for, let's say, the last 10 days. So that puts us in a much better position to identify what's actually going on with the volume. So let's go back in here to the chart and add this. We'll add the ANA relative volume indicator, and you will find that in our free indicator library over at licittrader.com. We have a member section, free member section, and you can grab this indicator over there. You see here we have a look back period of the last 10 days, and yeah, we'll just use 10 days in this example to have less of a loading time for our charts here. So what we're seeing here is that we have a increasing volume on these bars. So let's see how this plays out. I haven't really tested this in advance, so this is just a general idea that we're playing around with here. Basically what we'll do is to make a comparison of the last volume bar with the current one. So we're going to do a indicator comparison again here. We're going to call this relative volume comparison. And we're going to grab the relative volume indicator. Like so. We're going to use the same reference period as we have on our chart. And we're going to use the same for input B. And then we're simply going to displace it. So we'll compare the volume information 1 bar ago to the current one. All right, and the output is going to be the same for long and short. And we're going to add a displacement to input A. So volume 1 bar ago is bigger than the volume of the last bar. And let's just combine here the reversal patterns and this relative volume comparison to see what we end up with here. To do this comparison, we're going to grab another AND node here, just looking at these two. Okay, to see if we have. Okay, so we do get a signal out of this. On this one bar here, we see the volume in this one was less than the previous one. And now obviously we turned off the trend channel filter, or the filter specifying if we're in an up or a downtrend. And we see here again on this bar, we have lower volume than the previous one. So I think this is kind of doing what we wanted to do. Again here, we have lower volume than the previous one. So in terms of reversal patterns, I think that's what we want to see when we're using it in connection with the regression channel here. So let's hook it all up into one logic node. And see what happens. So here we're in a downtrend. We see lower volume print on this reversal bar. Doesn't quite go the direction that we wanted it to do. So I guess the next step now is just to do a preliminary test if this concept is actually doing or performing statistically, if it has a benefit for us in terms of identifying profitable trading opportunities. So in terms of verifying setups, I like to just, as a preliminary test, do a timed exit. And that means that I just want to establish a connection between my entry logic and what actually happens in the market after, let's say, 5 bars. So I do the entry, take the entry signals, and then I do a timed exit after 5 bars, and that will tell me if there is a effect in the market based on what I've set up as entry conditions. So I'm going to just copy this, and I'm going to create a exit logic. It's called timed 5 bars. And in order to do that, we're going to add a couple of function nodes here. We're going to add a signal extender, a signal counter, and we're going to add a inverter. All right, so let's set this up. We're not going to reset this. We can work with just 5 bars. We're going to set this to digital. We're going to count up to 6. And inverter, we're going to get rid of these guys, and we're just simply going to swap this and see what happens here. So let's look at this. Okay, so that's the exit. That's the entry. We have 1, 2, 3, 4, 5. So long signal, and then exit after 5 bars. I was wondering about these, why I get so many exits on this. That doesn't really make sense. Well, I have two entries, so that does make sense. I'm going to just check the settings here again to make sure that I didn't skip something. We're going to turn this off the reset here. Let's see if that makes a difference. Yeah, not really. But as I said, we're just going to enter here when flat. So I think that should take care of this issue. We won't have 2 signals or a number of signals on top of one another. So what we'll do now is just to go into the strategy analyzer and look at how this performs statistically in our backtest. So we're going to grab a strategy analyzer. I'm on a different monitor now, so you can't see that, but I'll pull that over in just a second. So we're going to test the ES. And I'm going to grab the reversals with the trend template that we just created. So we have Raven here, reversals with the trend. Aha, I forgot one important thing. We need to save this before we go anywhere. So we go in here and we save. You obviously want to work with an updated version of your template when you go to backtest. So important to do that right before you get into the backtesting. And we go and grab the reversal with trend template. And just pin this here. Grab the entry for the entry logic, the exit for the exit logic. And we're going to only enter when flat. And yeah, we're using a ATR exit in case we move beyond the expected. If we have a massive breakout before this timed entry, then we have this 1 to 2 risk reward ratio in place just to keep things realistic in terms of stop loss and profit targets. And we're working here with a 5-minute chart. And we have ES identified here. So let's just run this. And then we can just quickly summarize what we've done here so far. We've identified areas of the regression channel where we're looking for setups. We've identified that the regression channel needs to be sloping upwards for long signals and downwards for short signals. We've looked at the reversal bars and the spike bars, how to define them and how to place them within the regression channel. And then we briefly explained relative volume as well. We want to have a decrease in volume at these reversal patterns when they're plotting at the upper and lower area of the regression channel. So let's see if we have a strategy. It's still running here. Hopefully it is not frozen up on us. So we'll give this another second. So yeah, we've covered quite a bit of material here today. It's a little bit outside of what we usually do in our webinars and partner presentations. As mentioned, we got this question here on reversal patterns in the regression channel, and so that's what was the background for this little tutorial. I thought I'd just show how to add a couple of rules in Bloodhound and how to go about creating a strategy template. If you want to get a general idea of what our approach is, you can swing by our homepage and sign up for our video course there. And as I mentioned, we also have this extensive free indicator library that has some of the most downloaded indicators for the NinjaTrader platform. So you can do that, become a member here in the download section. And that's where you'll also find the AntiRegression Channel and the relative volume indicator. So it looks like this has unfortunately frozen up on us here. That's a bummer. Let's see if we can close out of this. Maybe we can open up a new one. If not, I will get back to that in a different presentation, perhaps on backtesting. If you go to our services section on our webpage, lasertrader.com, you can also direct any questions that you may have about this strategy template or any strategy template or programming requests that you may have. You can get in touch with us here in the contact form. Yeah, otherwise, I would recommend looking at institutional price action levels when you're considering which trades to enter and which ones to pass on. So if you're familiar with what we do here, we work quite a bit with the VWAP indicator and the pivot levels. So I can just add those to the chart here and explain a little bit about those. It does look, unfortunately, as if the strategy analyzer has frozen up on me here. So I will unfortunately not be able to show you any backtest results on this. What we do see here, though, is a quite nice example of a confluence between the VWAP level of 2 days ago and the current day VWAP. If you're not familiar with what the VWAP is, go ahead and sign up for the video course on lasertrader.com. We'll explain a little bit more about it there. Otherwise, we have also tutorials in our membership section. So if you're interested in that, go ahead and sign up for that. Basically, what we see here is a retracement into the current day VWAP and this VWAP level of 2 days ago, and we see this is lining up nicely as well with the regression channel here. So we have a bounce off of that. As I said, this mid regression line here is probably a good area to take off some risk. Let's see if we have some other examples here. Again, a retracement into the current day VWAP and the VWAP level of 2 days ago. Here we have a trade that goes straight against yesterday's low and support level of the pivot indicator, the first support. So probably a good trade to pass on this. There's always a lot of support around this level, and especially when there's a confluence with the low level of yesterday. So that's something that you would probably want to avoid getting into. And this one over here, again, we have a retracement here into the current day VWAP and the pivot level, yesterday's close. So this is actually quite a nice one, although it's just a short bounce here and then it continues down. So that's how we read these institutional price benchmarks. If you would want to add that to the strategy templates here, we would use the support resistance solver of Bloodhound. You can add that here. And you can choose the headwind option. The headwind is making sure that you're not going against these key support and resistance levels. So you then measure the distance away from your key support and resistance levels by using a ATR calculation here. This is based here in this case on a 100 ATR period. You can of course change this to 50 or whichever distance a look back period that you choose. And then you want to add, of course, the indicator in question. So I just added here the VWAP and the pivot levels. So I would put in pivots here. Pivots daily. And I would go here with the main pivot levels. So R1, S1, R2, S2, main pivot. I would probably also not want to go against the central pivot. That is the 50% retracement, or the half of yesterday's range. So a lot of traders looking at that. And I would also not want to take trades going straight into yesterday's high, low, and close levels. All right, and then also I want to work with regular trading hour pivot levels. And in Bloodhound, you want to set this to intraday data. If you're not sure how to set up your session template, there's also a tutorial up on our website on how to do that. Very important for correct use of pivot levels if you want to isolate the regular session from the full session. So you hit OK on this, and support resistance pivot. And then we can copy this guy for previous VWAP levels, also important. Support and resistance levels. Obviously, you need to change the indicator for that. So you go over here and you grab the Lizard Trader current day VWAP, add it, and select the plots that you want to define as key support and resistance. So that would be, for me, the yesterday VWAP level and that of 2 and 3 days ago. All right, so I think that is basically it for this tutorial video. Just hook these up to our logic board here. Again, I'm sorry that this backtest sort of froze up on us here. It does happen sometimes with NinjaTrader. We'll have to shut this down and open it up again, but I'm not going to do that during the presentation here. So yeah, just get in touch with us if you have any questions on this template or any other templates that you want to create. We're available for that as well. And with that, I think I'll like to wrap up the presentation here. Yeah, you can also get in touch with me over at info@illicittrader.com. Otherwise, if you like this video, please give me a thumbs up below or leave a comment and tell me what you got out of it. Also, if you'd like to share this with some of your trading buddies, feel free. That'd be greatly appreciated as well. Many thanks for checking in. I hope it's been of value for you, and I look forward to hearing from you very soon. Have a good one and take care.